Hey everyone, welcome. So, have you ever glanced at a stock chart and felt like you were trying to read some kind of secret code? Well, today we're going to teach you the alphabet. And by the end of this, you'll start to see the stories hidden right inside those charts.
I mean, look at this. To most people, it's just a random squiggle, right? It's a chaotic, jagged line. It's really easy to see why your eyes kind of glaze over. It just looks meaningless, or maybe even a little intimidating.
But what if I told you that's not random noise at all? What if it's a language? And every single peak, every valley, every shape, it's all telling this rich story about the battle between buyers and sellers. And that's our goal today, to teach you the alphabet of that language.
Okay, let's dive in. Section 1, Decoding the Market's Language. We're going to start with the absolute basics here. Think of this as learning your ABCs, beginning with the simplest chart type out there. This is the foundation for everything else.
So, this here is a line chart, and its beauty is just how simple it is. Imagine you want to track the temperature, but you only check it once a day, say, every evening at 6 p.m. You'd write down that one number, and then connect the dots day after day. That is exactly what a line chart does. It just connects the closing price from one period to the next. Super simple and clean.
Okay, so next up we have the bar chart, which is a huge upgrade in terms of the information you get. Each one of these little vertical bars gives us 4 key data points for any period of time: the open, the high, the low, and the close.
So here's the crucial difference, right? The line chart just gives you that one temperature reading from 6 p.m. But the bar chart, that's like getting the full daily weather report. You get the temperature when you woke up, the absolute hottest it got all day, the coldest it got, and the final temperature in the evening. You're getting way more data, but it still feels a bit clinical. It doesn't really tell a story.
And that brings us to the main event, Section 2, Candlesticks. Seriously, this is what most traders are looking at day in and day out. It shows the exact same data as a bar chart, but it does it in a way that's so much more visual and intuitive. It basically turns that data into a picture story.
Okay, so every single candlestick has 2 main parts. First up, you've got the real body. That's the thick, colored part. It shows you the difference between where the price opened and where it closed. It's super simple. If the body is green, it means the price closed higher than it opened. If it's red, the price closed lower. Green is up, red is down. Easy.
And the second part. Those are the thin lines you see poking out from the top and bottom. People call them wicks or shadows. And these are so important because they show you the absolute highest and lowest the price went during that time period, even if it didn't end up closing there.
You have to start thinking of a candlestick as a battle report. It's the key to all of this. A green candle means the buyers won that battle, pushing the price up. A red candle means the sellers won, pushing it down. And those long wicks? That tells you there was a fierce fight, where the price got pushed to an extreme before one side pushed it back. This is where data starts to become drama.
All right, Section 3, Stories Told by Candles. See, once you start looking at these as little battle reports, you can actually start to read the stories they're telling us about what's going on in the market and, maybe, what could happen next.
Okay, first example. Take a look at this little guy. This is called a doji. And you'll notice the body is just this super thin line, right? That's because the price opened and closed at almost the exact same level. So what story is this telling? It's a story of pure indecision. The buyers and sellers went at it. You can see from the wicks that they pushed the price all over the place. But by the end of the day, a total draw. Nobody won. It's like the market is taking a breath, trying to figure out where to go next. Okay, next up, check this one out. It's called a hammer, and, well, you can see why, right? It's got that small body up top and this really long tail or wick at the bottom. The story here is all about rejection, a powerful rejection. What happened was the sellers grabbed control and just slammed the price way, way down. But then, and this is the key part, the buyers stormed back in with incredible force and literally hammered the price all the way back up to close near the high. This can be a really strong sign that the buyers are about to take over.
Okay, so far we've looked at single candles. Now let's look at a story told by 2 candles. This is called a bullish engulfing pattern. You see that little red candle showing the sellers had a small win? And then bam! It's followed by this huge green one that just completely swallows or engulfs the one before it.
This is a story about a total takeover. It's dramatic. The sellers thought they were in charge, but then in the very next moment, the buyers came in with so much force that they didn't just stop the sellers, they completely wiped out their progress and then some. It's a story of a sudden, powerful shift in momentum.
Okay, let's get to our final section. And honestly, this might be the most important one. Section 4, the trader's golden rule. You've learned a few words now from the market's alphabet. But before you run off, there is one golden rule you absolutely have to understand.
So you're probably thinking, okay, great. I see a hammer, I buy. I see an engulfing pattern, I sell. Are these foolproof signals? It's the question everyone has. And the answer is really, really simple.
No, just no, not at all. And this is hands down the biggest mistake beginners make. They learn a handful of these patterns and they think they found some kind of magic crystal ball that's going to tell them the future. They haven't.
I want you to think about it like this. A single candlestick pattern, like the hammer we saw, is just one word. Let's take the word fire. What does that word mean on its own?
Well, it totally depends on the sentence it's in, right? Let's all sit by the fire is a pretty cozy image. The house is on fire, not so much. It's the context that gives the word its real meaning. And it is exactly the same in trading. A hammer that shows up in the middle of a messy random chart, it means almost nothing. But a hammer that appears right at a major support level after a long downtrend, now you've got a compelling sentence. Context is everything.
So, we've just given you the basic alphabet of the market's language. You can now see the huge difference between a simple squiggly line and the rich story being told by a single candlestick. You know what a fight between buyers and sellers actually looks like on a chart. So the real question is, now that you know the alphabet, what stories are you going to start to see?